The 100K cap is going. Here's how to protect your liquidity and your reputation under SEPA Instant. Think of SEPA Instant like a water supply. Until recently, each payment flowed through a 100,000-litre pipe, a manageable, controlled stream. Now that cap is being lifted. Soon, your customers will be able to send very large payments, potentially tens or hundreds of millions, instantly 24/7. That's going to cause big problems. According to the regulations, you can only set a bank-level limit if you already have one for SEPA credit transfers. Regardless of what you do, you must let your customers set their own daily or per transaction limit at the customer or account level. So, if you don't already have a PSP level limit for SEPA credit transfers, you can't set one for SEPA Instant, even if you want to. That leaves you exposed. Let's say you don't have a limit and 100 customers each send 20 million at 3 a.m. on Sunday. What then? You need to have enough cash in your tips account to fund it. But how much is enough? 200 million? A billion? If you can't fund it, payments will fail, and that puts you in trouble with both customers and regulators. The regulation then states that daily or transaction-based limit for instant payments must apply to all payment initiation channels, and that any changes must happen immediately. In other words, you need to ensure consistent limits across all payment channels. If they are not synchronized, payments can fail or go over limit. Take Bob the Builder. He accesses his account from multiple channels. But as a bank, you can only see his account activity in isolation. This creates a challenge in managing liquidity and limits across different regions. The channels don't talk to each other, and they're not supposed to. That's your job to manage. So, you have a problem. A limit change in Germany might not be reflected in Belgium. If the daily limit is reduced from 20 million to 5 million in Germany, the limit won't be updated in Belgium. A payment in Belgium might exceed the new limit in Germany. That creates risk. Liquidity can be drained faster than expected. Payments might be rejected and your customers' experience and confidence will suffer. So, the question is, how do you get visibility? What's the best way to maintain a single up-to-date date limit? The simplest answer is to maintain a centralized service or backend layer. It should integrate in real time with all channels, hold the limit centrally, and validate payments before they go through. This helps both you and your customers stay in control of liquidity. So, if Bob the Builder initiates a 20 million payment in Belgium, it will call your central limit service to display Bob's current limit and perform an authorization or limit validation check for a requested payment amount. That way, Bob's Belgian team can see the limit has been reduced. They are prevented from making the payment. Even if you are enforced limits at the back end, show them on the front end on every channel so Bob knows what he is allowed. You will need to set up one of these for every customer. Now, it's in your best interest to get your customers to set a limit. If they don't, you have less visibility over how much they are planning to spend. So, use them to forecast liquidity. If Bob sets a limit of 50 million, you can use this and historical SEPA credit and targeted traffic to forecast how much he's likely to spend. Then, do this for the rest of your customers. Use it to work out how much liquidity you will need in your tips account. It won't be perfect, but it's better than guessing. We have outlined 5 more practical ways to improve your customer experience. Check them out in the article below.